As we know that there are two methods of taxation, that is the direct tax and the indirect tax, and on the same basis we have two kinds of taxes, that is the direct tax and the indirect tax. Now what does this direct tax mean? Let us discuss that first in detail. As per definition, a direct tax is a kind of charge which is imposed directly on the taxpayer and paid directly to the government by the person, juristic or natural, on whom it is imposed. And it is being also said that a direct tax is the one that cannot be shifted by the taxpayer to someone else. Now, what this jargon definition mean? Let us talk that, or rather discuss that in detail. A direct tax is imposed directly onto the taxpayer. It simply means that the taxpayer, let us say this is a guy, okay, this is a guy named as Vipul, okay. Now this boy or this person, he's a man, he's earning nicely, and this person has been imposed by a direct tax, has been imposed by a direct tax of, let's say, 2 lakh, 2 lakh of rupees on his income, on his income. Now Vipul has to pay this particular tax, which could be his income tax, to the government, to the government, to the government directly, directly via the government agency, which could be the income tax department, which could be the income tax department. Okay, now this is called as the direct tax, where this person Vipul has to pay it to the government. The other thing that we know from the definition is it is to be paid directly to the government, as we have already discussed that the person is paying it directly, this he is paying it directly to the government. Okay, now he is paying directly to the government directly, and a direct tax is one that cannot be shifted, that cannot be shifted, that he cannot shift this particular tax onto his employees. For example, Vipul is Vipul is a businessman, okay, and businessman, and he's a carpet manufacturer, rather carpet manufacturer, manufacturer. He's a carpet manufacturer. If his income tax comes out to be 2 lakh, he cannot distribute this tax amount onto his employees. He cannot. He cannot. Okay. So this is called as shifting of tax, that is, he cannot shift this particular one. Okay. He has no choice essentially to pay or not. There's an another dimension to the direct tax, that Vipul, or that the person that is a taxpayer, has no choice whether to pay this tax or not. It is essential. This tax is essential. He has to pay it. He has to pay it. There is no particular choice regarding the same. If there's a due date, let us say it is 15th of March, then on 15th of March, Vipul has to pay this tax. He cannot escape from it. And if he does, he will be imposed with fines or further penalties, which could be in the form of interest, or which could be a criminal penalty, or kind of he can be sent behind the bars. Penal. It is penal in nature. Now, the other thing that we know from direct tax is a direct tax is progressive in nature. It is always progressive in nature. Progressive in nature. Now, what does this progressive word means in terms of in terms of taxes? This word progressive here, it simply means the amount of tax, the amount of tax increases the amount of tax increases with an increase with an increase in the taxable income, with an increase in the taxable income. Let's give an example here, rather take an example here. If Vipul earns, let us say, 5 lakh of rupees, 5 lakh of rupees, and the tax rate is, and it is my taxable income, and the tax rate is, let us say, 30%, then tax would be my tax would be 30% of 50 lakh. Sorry, it is 5 lakh, 5 lakh, which comes out to be 1.5 lakh. With a simple calculation, let us do the calculation also. 5 lakh into 30 by 100, which comes out to be 1.5 lakh. Now, the other thing that, as we are saying, it is a progressive tax. In another case, let us say there's another guy named as Vibhor. Okay, now Vibhor earns 10 lakh of amount in a year. It's a pretty good amount. 10 lakh of amount. It is his taxable income, and the rate, as we all know, is 30%. Then Vibhor would be paying 30% of 10 lakh, of 10 lakh, which is 10 lakh, okay, into 30%, that is 30 by 100, which is equal to 3 lakh. So here we say the person who is earning more is paying more, and the person who's earning less is also paying less as his income tax. This is called as the progressive nature of the tax. Well, in this way we can say that the person who is not so rich, or the person who is rich, there will be a difference in income tax that they will be paying to the tax department. This is what we call as the direct tax. And let us give some certain examples of direct tax. It could be the income tax, could be the income tax. It's a very good example of the progressive tax or the direct tax. Other one could be your corporate tax. Corporate tax. Here, all the corporates do pay this tax on what kind of company they have, the corporation they have. The third one is my property tax. It is my property tax. It is property tax. This tax is being paid on the amount of property that you have, on the scale of property that a person has. The fourth kind of direct tax is a gift tax. A gift tax. Gift tax. So therefore, if a person pays, or a person gifts his nephew or anyone a gift, then that person, that the nephew, will be paying this particular tax to the government. And another kind of tax is also there, which is called as the inheritance tax. Inheritance tax, also known as the death tax, or the estate tax. They're one and the same thing. So death tax or estate tax or inheritance tax is something that the person pays when he inherits a property from someone who is dead now. These are certain kind of taxes which comes under the direct tax. Direct tax. We'll be discussing about the indirect tax section in our next video. Thanks for watching.